David, many thanks for joining us again this morning. Um, Obviously, you've just announced your interim results. You've had a revenue shortfall, which is attributed to the delays in the Microsoft implementation, which is obviously strategically important. Can you just discuss what has happened there and when we expect the service to go live now?
Yeah, thanks, Dan. It's a pleasure to be here. Yeah, as you said, there was a revenue shortfall in the first half of the year, although we are guiding higher into 2021, as you just mentioned, as the Microsoft service goes live. So we signed, just to take a step back and remind everybody what's going on here. We signed a deal over a year ago with Microsoft, with the Microsoft Azure team. And for the first time to embed a third-party product and sell it as a core Microsoft cloud service as part of the overall Microsoft portfolio. And obviously this is a pretty tricky thing to do, that Microsoft had never done it before with the first and only ISV to ever do this. So we're launching the LiveData platform, LiveData as a service, and as I mentioned, with the first ISV to ever achieve this. And this is the culmination of a hell of a lot of engineering and investment on both sides. I mean, we've had hundreds of people from Microsoft, for example, working on this. And the user experience is kind of, if we're talking about Microsoft Windows, then we'd be a menu item on the Windows operating system. So kind of like a de facto service, if you will. And the experience for a customer is completely turnkey. So the reason to say all of that is that this is not a small undertaking. This is highly strategic for both parties. So we initially anticipated to launch this somewhere around the half year point, or if not before. And we'd anticipated that we would be able to pull over the first few customers into revenue generation in the first half of the year. Unfortunately, there's been a delay. It's not a long delay. We're anticipating this sometime around early October when this will actually go live. And as part of that, we're plugging in to the Azure billing system. And obviously, one of the big values of this is that we can leverage all of the procurement, the consumption relationships that Microsoft already have with their customers. So while there's a delay, the upside is significant. And we also announced that as part of the preview stage of this, we've signed up 46 existing Azure customers without too much effort. Actually, that's just been 4, 5, 6 weeks. We've signed 46. And for perspective, in the last few years in cloud, we have a handful of customers as part of the preview stage, without this even becoming a billing option. We have 46 companies that have already implemented, used, tried, and given feedback on the product, and it's all been extremely positive.
And could you just talk about how you allocated resource over this period? Obviously, you've got these two big strategic customers. There has been the revenue shortfall. You're not the biggest of companies. How did you go around allocating those resources?
So if we just get some perspective here, actually, we're talking about two of the biggest companies in the world. And what is the value to be the de facto standard data movement, data replication technology in those clouds, in AWS, and Microsoft Azure? I can tell you that the company that does that is not worth 300 million, 400 million. That's a multi-billion pound company. And for me to allocate resources on short-termism would be foolhardy. Yes, it would make everybody pleased that, you know, that the short-term numbers look good, but we are building deep intellectual property and significant shareholder value in these deals that we have with both AWS and Microsoft.
Can you just help frame how investors should think about the significance of this deal?
So last Thursday when we made the announcement, we announced three things. We announced, firstly, the launch of a product called LiveData Migrator, which is now generally available. And that product is a turnkey experience in the way in which customers deploy, use, and manage the product. So for perspective, a number of people used to say to me, "Hey, if this stuff is so important, how come WANdisco doesn't have thousands of customers?" Well, the friction that we saw in customers deploying the product was all around how difficult it was to deploy this on the top of a data lake like Hadoop, for example. It was pretty complicated. It would require, a big lead time and maybe some consulting advice from WANdisco in order to deploy the product. So it looked quite a bit of friction. So LiveData Migrator is a turnkey experience, and we actually do demos of this product being deployed in 15 seconds. So it's a true cloud service. You just press a button, turn it on, and it's available. So that's a game changer, and I can't stress that enough. That's a significant game changer in WANdisco's ability to get a cadence of thousands of customers if necessary. The second thing we announced is that we've achieved something called Competence with AWS. That doesn't sound like it's a big deal. That's a really big deal. So we're the first ISV to achieve competency status with a focus on data migration. So that means that competency program, I'll just read for you exactly what this means. It's designed to identify, validate, and promote AWS Partner Network, advanced and premier tier partners that can demonstrate technical expertise and proven customer success. APM partners are vetted, validated, and verified against a very high bar to achieve AWS competency designation. What this means is it's a very similar fast track deal, if you will, with AWS. So we're now able to, so AWS, Amazon Web Services, can now recommend and implement WANdisco technology on the Amazon cloud. And that's really strategically important, because for WANdisco to just have Microsoft created obviously quite a significant concentration risk. So now we have the two major cloud vendors, and our total addressable market has just doubled in size, because now we're able to support Amazon as well. And I know that this announcement was slightly lost, but this strategically is of vital importance. And the third thing we announced in that press release is that as part of that, the first customer to successfully migrate their on-premises data lake to the cloud is GoDaddy. Now, everybody's heard of GoDaddy. Now, if you think about it, when we talk about why do people need to use WANdisco technology, well, it's because we're the only game in town, we're the only product capable of migrating large quantities of data that also have a large number of changes or transactions. And at peak, GoDaddy have 100,000 changes or transactions per second, right? So imagine this, their entire business runs and is based on this storage system on premise that can't be turned off even for a second in order to migrate data while a migration is going on. So it's vitally important that their system kept on running even while a migration was happening. And they're a quoted customer. In fact, I think they described this as being the only product that could deliver in a tolerable elapsed time the migration from the Hadoop system on premise into the AWS cloud.
I mean, following on from that, and I think perhaps you've answered some of this question already, but obviously it's been a 2-year process to get Microsoft to fully embed your technology. In terms of that journey towards monetization and integration with AWS, how do you see that evolving, and should we be thinking about a similar timescale?
So, two different approaches. So, in the case of Microsoft Azure, it's a deeply embedded product. It's part of the fabric of their cloud. It is implemented as a service as part of the standard de facto product. In the case of AWS, they fast tracked this. So they wanted to get to revenue much sooner. They wanted to get to live customers much sooner. So they've created this competency category, put WANdisco in the competency category, and then implemented this as a marketplace offering. So we've already seen revenue straight away with GoDaddy, and there's a strong pipeline of deals behind that as well.
Looking at the key differentiation of your technology, which is the ability to migrate and provide ongoing replication for data sets that are obviously very large but continuously changing. How confident are you on the size of that segment in the market, and how do you actually go about determining the size of the market?
So yeah, on the total addressable market, it is a question that we get asked quite a bit. When we first did the marketplace sizing, we sized this at between 4 and 6 exabytes of data, and when we sort of multiply that out, it is a $1 to $1.5 billion TAM. It turns out that we were wrong. Microsoft estimate this to be a 200 to 300 exabyte marketplace of on-premise analytical data that needs to move to cloud. So we were, sort of 50 times wrong, if you will. So regardless, the total addressable market is certainly in multiple billions, and certainly something that WANdisco can grow into.
And then moving on to the multi-cloud element, you've talked about the ability for WANdisco to enable multi-cloud implementations. Are you seeing much evidence of people deploying multi-cloud strategies, and how quickly do you think that might evolve?
So in terms of multi-cloud, virtually every single customer that we now talk to, even customers that previously said we're just going to go to AWS or we're going to go to Azure, I think it's highly unlikely that they're just going to use a single cloud. So virtually every company on the planet is going to have a multi-cloud strategy. I think there will be in future a spot market associated with compute. So you can arbitrarily decide to arbitrage between different computes pricing in different clouds. And I think there'll be a futures market for that as well. It's obvious that, the compute kind of is the new oil for companies, certainly. So I think multi-cloud is going to be a thing that starts now, but certainly in the outer years, it's going to be very, very important that companies can hold data and hence run applications in different clouds.
And then looking at your two major customers, your two major strategic customers, Microsoft and Amazon, pretty much the two largest companies in the world by market cap, which obviously brings huge potential, but also brings with it concentration risk. Obviously, you've just halved that concentration risk to an extent with Amazon, but you're looking forward. What is your strategy for mitigating that customer concentration risk?
So I can tell you we have interest from virtually every other cloud vendor we've spoken to. It's not something that in the near term that we don't have the resources to be able to support. There's 6 or 7 other clouds that surround this, but that is certainly something that we could do at any time in the future.
Good, and that's you, Erik. You're clearly anticipating significant growth over the next few months. Can you start off by just talking through the level of visibility you have on that growth? You talked about the number of registrations moving up to 46. How many of those would you expect to convert into revenue-paying customers by the end of the year? And do you need Microsoft to attract additional customers to meet your year-end goals?
Well, out of the 46, we've actually slowed down the sign-ups until we get the billing issue resolved. But there's many, many more in the pipeline just waiting to turn the service on. Microsoft has a thing called MACC, Microsoft Azure Commitment to Consume. And so they've already prepaid for a level of Azure service, and this is one of the items they can consume. So once billing is switched on, we anticipate that pipeline will fill even faster. They'll be out and turning the service on, enabling it, and that also is the key to our monetization of moving the data. With Amazon, similarly, we have visibility into the pipeline. I think it's important to realize that the first major deal we've done with them, they actually brought to us because we were the only company that could solve that particular problem. GoDaddy has 100,000 changes per second of data, and there is only one company on the planet that can migrate that successfully, and that's WANdisco. So GoDaddy wanted to go put data into AWS. AWS said talk to WANdisco because they're the only guys that can do this. So that virtuous circle is still intact with AWS. As we make money, they make a lot of money, and that's good news for everybody. Everybody's motivated to do the same thing.
Thanks. And then looking forward to 2021, you set a revenue target of at least $35 million. How many customers is that predicated on? Can you give us some clues in terms of what underpins that forecast?
Well, our goal is to have at least 50 large customers moving about 100 petabytes of data in the Microsoft channel. And that's an equivalent of about 20 to 25 million in revenue on an annual basis for next year. And for AWS, looking to do 30 petabytes of data through the AWS. And that'll be essentially 10 million in revenue. And then we still have our traditional, business of the ALM product, or what we call, we changed the name on that. ALM product, and also the larger contracts that are of the subscription model. We'll still be renewing those where they make sense, and but we do expect to see predominantly revenues to be out of the SaaS business, based business, and only about 5 million of the traditional type business for next year.
Understood. And then looking at visibility, you're setting recurring revenue as a key KPI going forward, and I understand that you're aiming for 80% of the data you migrate to flow into ongoing fees. Assuming that business grows in line with expectations, how much of that revenue do you expect to be recurring SaaS-based revenues?
Essentially, once it's fully established in the outer years, it'll be nearly all SaaS-based revenue. We're in a transitional period where we still have subscription revenue. The Amazon revenue initially will also be subscription-based because we don't have the billing facilities plugged into it. But the bulk of that is all recurring. If you think about it, there's two components to what we do. We do the move with LiveData Migrator. That moves the data. You still keep that in place because data is changing. For example, use the GoDaddy example. With that many changes per second, they have a live migrator issue. They need to continue migrating that data into the cloud. Then to keep it consistent with using the Microsoft terminology, LiveData Plane, or the old Fusion product, we think that's going to have an attach rate of about 80%. And that gives you end-to-end consistency, the active-active that WANdisco does so well. And so we think that will have, given that folks are still moving applications into the cloud, and will be doing so for a long time, we think that those become an essential part of infrastructure as you roll out your cloud-based applications. And that's a good chunk of that, 80, 90% recurring. There'll be obviously some churn that always happens, but we think it'll be minimal.